Hello and welcome to the another weekly market update from 11th March to 15th March 2024. So let's start with the global economy. US came out with their CPI inflation data, which had unexpectedly been edged higher to 3.2% in the month of February, as compared to 3.1% in the month of January, which dampened the hopes for rate cut in the month of Feb by the Feds in the coming month. The U.S. Treasury, 10-year Treasury bonds also. If you look at the global market, the Nasdaq was negative, for the week. The European market was positive by 1 to 2%. The Asian markets, the GIFT Nifty was down by 2.6%. The Japanese Nikkei was down by 2.5%. Rest of the markets were either flat or they ended in a positive. Coming on to the oil prices, the oil is trading at $85.2 a barrel, with with lot of OPEC countries announcing the rate production cut to be continued for another quarter. The gold, after touching its high of 66,000, has come down by 0.57% to 65,645 per 10 grams. With all the data in the economy, in the global economy, where the US inflation was high and the bond yield was high, the FII became the net seller of Indian equity at 8,016.9 CR. DIS bought 14,147 crores worth of equity for the week. India came out with their IIP number, where the IIP for the month of January had eased to 3.8%, as compared to December, which was at 4.2%. This easing was cause of fall in manufacturing at by 4.2%, mainly in which there was a modest rise in production of basic metal at 5.8%, and coke and refined petroleum contracted to 2.2%. The export-oriented service sectors like textile and leather products saw an increase. Even the fabricated metal production grew at 21.4%. But the strongest output was given by the motor vehicles, trailers, and semi-trailers, which was at 18%. Transport equipment also showed a highest growth of 25.3%. From the consumption perspective, the consumer durables saw a healthy growth of 10.9% in the data. But the non-consumer shows signs of concern, in which which contracted by 0.3%, showing that there's capital goods also witnessed improvement of 4.1% in the month of January from 3.6%. Even infrastructure or construction good output was high, as cause of the push given by the central government on the infrastructure side. Yeah, India also came out with their CPI inflation number. For the month of February, the CPI inflation held constant at 5.1%, which making it the sixth consecutive month for inflation to remain in the RBI target range. Even the rural inflation was stable at 5.3%, while urban inflation eased by 4.8% from 4.9% in the month of February. Only worry that currently we have is the food inflation, which is currently at 7.8% in the month of February. With all the things happening in the market, we had a correction happening in the market last week because of the reasons I had stated earlier in the video. There was a stress test guideline to the most of the mutual fund for just mid and small cap. The month of March also brings in the tax harvesting season for a lot of investors, and there were rumors that they were crackdown on a lot of dealers in the market. With this, we saw that the Sensex and Nifty crashed about 2%. Nifty Bank was down by 2.6%. Nifty Mid Cap was down by 4.6%. Nifty Small Cap corrected by 5.49% for the week. If we compare this data with their recent highs, Sensex were down by 2%. Nifty Bank was down by 2.6%. But mid cap corrected by 5.4% for the week from their highs. The Nifty small cap also corrected by 10.38% from their high. After this correction, we the PE on the valuation front, the valuation seemed has become a bit normalized. I won't say it's too attractive as of now, but we are still not very cheap. The Nifty 50 trailing PE has reached 23.2, which is above 2 years average and below 5 years average. Nifty mid cap 150 trailing P is at 27.2, which is above 2 years average and above 5 years average. It has moved down from reaching the 2 years and above and 5 years highs. Nifty mid cap 100 trailing P is now at 29, which is above 2 years average and just below 5 years average. So, why was the SEBI so worried about the mid cap and the small cap segment? So, I want to show you some data on that. I This is how much the money is being moved into large cap, mid cap, and the small cap through the mutual fund route. If we see that on an average basis, we see that close to 5,000 crore is being moved into large cap as a category. On the other side, we see that even in the mid cap segment, this money is close to 400 crores, which is very high as the large cap are not getting that kind of a flow into them. If we look into this scenario versus if we look into the small cap segment, where we see that there's a close to 2.5% increase in the flows, and this flows has come to 8,000 crores. So this is causing a froth in the segment where we know that there could be high liquidity in this segment. There could be challenges in this segment. So the SEBI was is rightly said so. They should be worried that the investor do not lose their money into this market. The stress test results are out. I think most of the fund houses have told the SEBI that they would be able to liquidate their portfolios in a month's time or close to months time, which is fair enough for any small cap scheme to be working in. But I think with this effect and the lot of AMCs taking steps to curtail the lump sum investment, this money that we are seeing 8,000 crores would go down. So let's move on to the candle charts. I have included this particularly cause of the tumultuous week we had. So last week when we were seeing this pattern, we saw that the Nifty chart was on a daily candle was going on the uptrend, but there came a we saw this trend reversing from. We saw that the three candle pattern was formed, which was followed by a red candle, which broke the 9 days moving average, and also the channel in which you can see on the screen, and closed below the 22,132. The next few session it tried to regain that level, but it could not sustain, and it fell and it closed at 22,000 level in the closing time. If we move on to the weekly chart pattern, we see that the weekly candle candle did not close above the 9 day moving average. On MACD, the blue line is almost ready to go below the orange line, which is a sign of downtrend. So we see a weakness in the Nifty position as of now. If this weakness continues, that there might be some more correction coming into Nifty. Now we move to the Nifty mid cap. Nifty mid cap on the daily chart was showing a sideways trend, as we had discussed in the previous video, and we can see that this downtrend had been broken on 13th March. And if we move on to the weekly candle, we see that we are still in a channel, and the chart has not the candle has not broken that channel. If this channel is broken in the next week, then we can see a correction coming up, another 10% correction coming up, where the black line is at a 41,764 level. This could be another support level for the Nifty mid cap if this channel is broken in the next week. If the same trend continues into Nifty small cap, where the market was moving sideways, and again the channel it gave a downward breakout on 11th March, 2024 on the daily charts. If we see if on the weekly candle, we see that it is still falling. It's still in the channel. It did break the channel during the day, but during the week, but it's still inside the channel. If this channel is broken, then we'll see another 10%. Then we can see another 10% of index coming down close to 13,000 level. It might go down. So all in all, the markets look weak as of now. Let's see how the next week comes into. If we move to the Indian bond market has been able to get a lot of money from foreign investors as compared to the equity market. In contrast with the equity market, where they have been net sellers for this year. Though so, Indian 10-year bond yields is currently trading at 7.6% yield. The yield curve in the short term is still negative, is still inverted, whereas the mid term and the medium and the long term yields are still flat. So this is all from my side. I do like, share, subscribe to our channel, so to get all the updates for on the weekly markets. Thank you.